So the person, 24-year-old entrepreneur, British Columbia, recently graduated. This is background. Over the period of 3 months, she observed a noticeable increase on the demand. So basically, explained she making the pancakes, coconut pancakes inspired by Sri Lankan cuisine, and her operation, despite of the constraint, the business grows steadily, largely based on strong customer satisfaction and word of the mouth referrals. Over the period of 3 months, observed that the noticeable increase in the demand. Customer began requiring same-day purchases rather than pre-order, while local gyms and small coffee approaches her for potential bulk supply opportunity. This development or prompt development false prompts Samantha to consider expanding. So now she's on the point. Should I go further or should I not? That's where she is. Now, what we can hear from what we can get from the next thing. From the next thing, we can have us weekly sales. So from the weekly sales, what you can do is you can get the total sales. Can you do that? How hard should be? Should not be hard, right? So from here, you can see the total sales. You're going to have 3 products. And each product, you have the selling price, you have the number of the products that you're selling. And that will be your sales per week of each of the product. Now, what else you can see? Samantha's current cost structure remains relatively simple. She operates from her home kitchen and does not employ staff. Her primary cost consists of ingredients and packing, along with reasonable allocation of utility of her own and her own labor, which varies at the fair hourly rate to better understand the true performance of the business. So now what we have is cost. We have the sales. Those are your sales. This is the money coming in. Let's check now money going out. Where are the money going out? No, I don't want that one. No highlights, no color. Let's go back one, like this. So this is your sales. Now let's see where you are on the cost side. Cost ingredient. For every order, you have it. Packing, 1.5 per order. Utilities, $50 per week. Now this is your fixed cost now. Once it's per week, and the period of time is 1 week. This is your fixed cost for the week. Make sense? So the $4, as you can see, that's a variable cost. What drives these $4? Number of orders. Do you have the orders? Yes, you do. So this order here matching this order here. Now, since this is your cost per week, weekly sales, you have a weekly cost, which is your fixed cost. And the last thing is her labor. $20 per hour, 15 hours. And that's again is a weekly cost. Every week she worked 15 hours. So you have variable, variable, fix, fix. And for that reason, can you calculate now if you have pancakes, 5 pieces, 12, the selling price per box? Orders, can you come up with the sales and cost for the week? Which one is variable, which one is fixed? We should be easily come up with that idea. So once we do that, with the increasing demand and operating limitation at home, Samantha considering now, once you see where you are in the profit of this scenario on the weekly basis, then we can start moving forward. With increasing demand of operational limitation at home, Samantha is considering leasing 600 food retail units in the small commercial plaza in Surrey, located near a residential neighborhood in the future center. Moving forward, will allow So now, if she, if you come up here with the calculation and says, hey, this business is profitable, per week you're making that much, time 4 weeks, you having this one per month. Now the question is, can you move further with this structure of the sales, this order that you're selling, and this cost per order? Can you move for the monthly and cover this cost? Because if you move to that retail, then you have to pay the rent. Utility is gonna go to 400 compared to actually the 50 per week, that's 400. So 50, 100, no, that's utility jumps twice. Now you have to pay insurance and then you have to pay other overhead. So your total fixed cost, you have to see. So you have to do two calculation. One calculation is if you stay at home on the monthly basis, since this is per weekly, you have to convert it on the monthly basis and then compare apple to apple. If you stay at home, this will be your monthly operating income. If you move to the retail, this will be your monthly operating income. So in addition, on ongoing costs, Samantha must also make an initial investment in the equipment and furniture necessary for the commercial operations. So if she goes in this direction, she has to have $11,000. If she stay at home, she doesn't have to spend those $11,000. So now the question is, once you run the calculation with the current demand, with the new costs, what happened? Can she afford to make this expansion? If the amount of process with the expansion, she expects to significantly increase. Now, we have the, again, now, going forward on the expansion, you're gonna see increase in the orders. With this increase in the order, now running the calculation again, and as you can see, the price per unit changes because we're changing the selling price now. Where will be on the profit side? Operating retail location will also introduce additional costs, particularly relating to the staffing, and you have the new cost. So as you can see, you have to do calculation of staying at home, how much is the profit, moving to the new place, what's gonna be. And you have to consider all these costs. So you have the cost per order. Again, retail model, retail model. Every time when you see a retail model, that's related to the retailer. So the way I see it, this all part here is with the retail. So I can easily highlight it in some different color. Let's put it green. Everything here up to this point is for the home. So compare home with the retailer, see where she is. Figure out if she's going to have enough cash, because don't forget, she has to have $11,000 cash to do the initial investment on the retail model. Then she might have this monthly cost, to sustain customer demand, build brand, something consider modest marketing plan. So this one is also part of the retail. Now, from a financial perspective, faces the funding challenges as a personal saving. Now, once you figure out, once you do the calculation, again, you have to do in class, or you can start doing the calculation so it can be easy to you to do it in the class. Calculation for how much gonna cost her if she do the business at home, how much is gonna be if she moving to the retailer, what will be the profit at home, what will be the profit on the retailer. Move to the month so you can compare month to month. If she stay at home, what will be the profit? If she move to the retailer, what will be the profit? Include the marketing cost as well. Samantha estimate that without this marketing cost, so in order we once we do this marketing cost, we gonna avoid the 50% decline. So basically, we need to consider those marketing costs. Those are the two things that definitely you have to talk about in your case, on your assignment, with the numbers, obviously. So you can start working on the numbers. When the time comes, you can be prepared and don't spend too much. So practice now at home, practice, calculate it. See where you are. Compare with your people or your friends or whoever you're doing. Compare. See if you're getting the right numbers. See if you're doing the right calculation, and make sure you get those one on Thursday. So now, from financial perspective, Samantha faces funding challenges, personal saving, which is insufficient to cover required investment level. As a result, she considered two primary financial options. First options involve obtaining bank loan of 8%, allowing her to retain ownership. The second option is involved in bringing an equity partner with the 30% ownership. So what I want you to do is consider which one is the best for Samantha. Calculate me the cost if she goes with the bank. She has 6,000 and she needs so she needs to borrow $5,000. She has to pay 8%. Come up with some interest cost per month or whatever you decide. The period, and then compare the 30% of the ownership stake based on the because if the person wants 30%, probably that person is going to chase 30% from the profit as well. So think about the profit if she goes to the retail, see the profit, see which one is the cheapest one. Make a recommendation. So that will be you have the home business one, retail business two. Solution here for the borrowing of the money three. In addition, financials must also evaluate operational risk associated with the expansion. While demand appears strong, there was certainty regarding whether these sales can be sustained. Moving to the retail space and reducing risk of unsold inventory, nearby coffee sales product. Carefully consider where to unique. Samantha is also committed. Okay, so here I want you to make a comment about this paragraph in terms of what she has to be careful with, that she has to monitor the other businesses. Is her business model going to be okay? So you have to come up with here some suggestions, some recommendation based on this paragraph. That's number 4. Samantha is also committed to maintain strong ethical standards within her business. She intends to source ingredients from the local supplier within business, ensure that the fair wages for the employee, and minimize the food waste where is possible. However, the ethical commitment may result higher costs, creating potential tension between the profitability and social responsibility. I want you to comment on this. That will be 1, 2, 3, 4. That will be the 5th issue that you have to comment on, the ethical issue. So I want you to see what do you think about this. So you can easily say what the problem is. The problem is that she wants to stay with the local business. Great. But staying with the local business might increase the cost. And I want you to tell me what you think. Should I stay support the community, or should I look for another source which gonna give me the cheapest material? What should I do? Should I care about the society, or should I care about my profit? Now, the finally next issue is finally required guidance of accounting treatment, particular relationship her initial investments of the equipment. She ensure which could be recorded as assets. And now, this is another thing that I want you to talk about in your assignment. So basically, going back to these costs, where are those? Here, you identify which one is asset, what will be potential residual value, and how we should treat it from the accounting perspective. That means you have to explain, well, the capital assets, since they're used for the period of time, we have to match the cost with the revenue which they're generating over the period of time. So the proper way is we to keep it on the balance sheet as an asset and slowly amortizing during the usage. Uh, the two options available, or few options available for depreciation or amortization: straight line method, unit of production, or declining method. You recommend one of those methods since you are the one who's gonna have to write it. Make sense? The next thing, I want you to tell me something about how Samantha will know that her business is profitable. Means show her how to calculate the profitability, show her how to calculate the inventory turnover and what the inventory turnover is, what will be good for her business since she's dealing with all those bakery stuff. Is she chasing high turnover or low turnover? What she should do with the cash? Do you think it will be good for Samantha to sell on credit or not?
Depends
And
on how big the credit is.
all right, but I don't suggest you that because with this small business, you have to run the numbers first, see what the profit we're talking about, and you have to think if she go on the credit, she might not collect the receivables. If she not collect the receivables, then her revenue is gonna disappear. Think about that. Samantha must make a well-informed decision regarding whether to expand pancakes into the retail option. So you have to technically make a suggestion. Should I stay at home first or should I expand in the retail? That will be the first thing. Second, you have to tell me if I expand, from how can I get the money? What will be my operational risk? Now, for the operational risk, you can consider something with the ingredients, something with the risk of the inventory, operating pressure that may have, exposure for the competitors, price of the product also. Then you have to recommend me what should I do with this. Should I buy products from the local community or should I go somewhere else? Accounting treatment, don't forget. Those are the suggestions that is expected from you. Now, on the calculations, when you're doing the calculation, I expect you now to implement what we talk about today, and you to differentiate the costs and split them between the variable and fixed cost. And once you're preparing the calculation, you to work with the now, if you can work with the contribution margin. If it not, do whatever you have to do. I know it's too early for you for this contribution margin, but if I know some of you doing very well on the first quiz, so those people they might go with the contribution margin. For those of you who don't get the contribution margin, it's going to be difficult for you. I'm not going to penalize you of not using the contribution margin as long as you come up with the logical calculation. Again, so this is the thing that you have to work with. Okay. I highlighted this important part which I expect to see those issues discussed. So I expect to see 1, 2, 3, 4, 5, 6 discussions. Definitely. Definitely 6. Now, they might be more, but that's going to come with the direct instructions that you're going to receive in class. So you can start working on the calculation and at least to get yourself ready for what's coming.